Hello everyone, welcome to Introduction to Business Chapter 1. Before we get started, I want to make sure you know all of the places that you can access this free online text that we are using for this course. When you're in the course, you can find textbook over here on the left menu. You'll also find it under Module 0, the introductory module. And you'll also find the different parts of each chapter linked directly under the module for that week. So you have a lot of places to access this online textbook. Chapter 1, Understanding Economic Systems and Business. We have several learning outcomes for this chapter. This chapter serves to really introduce us to business and economics in general. Here is a look at the business environment. You'll see we have both the external and the internal environment. The external environment consists of technological, economic, political and legal, demographic, social, competitive, and global. Internally, we have entrepreneurs, managers, workers, and customers. So we're looking at the internal environment of any organization, and then the external, so those external factors that affect the business. These are the basic economic systems of the world. You'll see at the top capitalism, communism, socialism, and mixed economy. And then under each of these, we see how they affect ownership of business, control of markets, and worker incentives. For example, under capitalism, we can see that businesses are privately owned with minimal government ownership or interference. How does this then affect the control of markets? We see complete freedom of trade, no or little government control. Worker incentives, we see a strong incentive to work and innovate because profits are retained by owners. Then we see communism, where you could really look at this as almost the opposite of capitalism in some ways, where now government owns most or all of the enterprises. Therefore, they have complete control. And in turn, you don't really have incentives as a worker, right? Because it's the more you work, the more you make, the more profit, but you don't actually get to keep it. So you can see where that can affect motivation. Socialism. So this is almost a little bit of a mix when you think of capitalism and communism. Right? So some basic industries owned by government, high taxation. When it comes to the markets, some are controlled, some are free. And then for worker incentives, again, you see that kind of the same when we look at capitalism, right? How it affects the more, obviously, that the worker can retain when it comes to those rewards or those profits, then we tend to see higher motivation from those workers. So this really ties into psychology as well. And finally, we have a mixed economy, which is really just that, a mixture of the economic systems. Then we see management of enterprises, forecast, and examples. And again, this version of our text was from 2020, so that's why it still has that forecast for 2020. As soon as the new version comes out, that will be updated. And of course, an example of capitalism would be here in the United States. Economics as a circular flow. So there's a lot going on in this image, right? So we can see if we look at the outside, sort of business and households, right? And then we see how all of this flows. Costs, revenues, the money spent by the consumers, and the money made, right, by the businesses. And then we see all of these inputs, and then all of these outputs, which are the goods and services. And in the center, we also see government that plays a role, federal, state, and local governments. So the takeaway from this is really how all of it works together. A lot goes into economics. Revenues and expenses for the federal budget. On the left, you see revenue, and this would be in the form of taxes. Corporate income taxes, Social Security, payroll taxes, individual income taxes. So there are different types of taxes. And then expenses, you can see a lot for defense, Social Security, Medicare, interest on debt, and then other, which pretty much encompasses, a variety of areas, and you can see those listed below. When we look at supply and demand, we are really looking at price versus quantity when we think about products or services for businesses. So for example, here we see the demand curve for jackets for snowboarders. So the higher that individual price of that item is, the less demand, right? So if that snowboard jacket is $175, it will have less demand than if that snowboard jacket is $50 or $25. So this is an example of what that demand curve looks like. And on the flip side, the supply curve for jackets for snowboarders. So now again, we see price and quantity. And here is the equilibrium price and quantity for jackets for snowboarders. So here we're taking that supply curve and that demand curve that we just looked at, and we're seeing where is that sweet spot. So we see that we need to sell 700 items, right? So 700 jackets at a price of $80 per jacket. And this is our equilibrium point. And this graph simply shows us the effect if we have a decrease in demand versus an increase in demand. So if there's a higher demand or if there's a lower demand for that specific price and the quantity. So what factors cause demand and supply curves to shift? There are many factors. You can see here on the left, the buyer's income, their preference, the prices of substitute products. So if I can get that same type of jacket somewhere else, that's going to affect that demand. Expectations about future prices, number of buyers, technology, resource prices, changes in prices of other products that can be produced with the same resources, number of suppliers, and taxes. And you can see how each of these factors affects the demand. Will it shift to the right or to the left? And then supply. Will it shift to the right or to the left? Market structures, perfect competition, pure monopoly, monopolistic competition, and oligopoly. And you'll hear these a lot if you take an economics class. And this really just refers to the number of firms in the market and the firm's ability to control price. So with perfect competition, there are a lot of firms and nobody can really control the price. You could think of a lot of products that you see at Walmart or on Amazon. You could consider in this category. Pure monopoly, there's one firm and they can control the price. And you could think of this as your local electric company, right? Because there's only one and they're in control. It's not like you can have options and go out and shop for your electric provider. Monopolistic competition, many, but not as many as in a perfect competition. So now you have a little bit of control over the price. Oligopoly, there's few, but you still have a little bit of control over the price. An example of this would be the airline industry. Sure, there are different airlines, but there really aren't too many, right? There have been a lot of mergers and acquisitions, and you don't really have a whole lot of choices in that space. And also cell phones. If you think about the cell phone providers out there, there are a few major companies. Then we see barriers to entry, product differentiation, and some additional examples. Again, looking at perfect competition, pure monopoly, monopolistic competition, and oligopoly. Are there any examples that you can think of